It was a great day on Wall Street with the S&P 500 advancing 1.5%. This was actually the fourth straight up session for the market, and that hasn't happened since all the way back in March. So we're starting to see a little bit more bullish enthusiasm around. We're starting to see more risk-on types of days, which today certainly was, with things like Bitcoin and speculative tech stocks leading the way for us here today. We did see that most stocks within the S&P 500 closed higher, with an advance of about 79% of the components within that particular index, so it was broad-based as well. We do have an important jobs number tomorrow, so things can change on a dime, but for right now we did see a number of posture changes back to weekly bullish status. So we'll take a look at all of that in tonight's video. Then I'll get into a trade application example of a more speculative stock within the healthcare sector that's starting to perk up and breaking out to new recent weekly highs. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 7th, 2022. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into our description area. Make sure you're signed up for our email distribution list, so that way you can be notified whenever we post these videos. And remember, the next week or two, David and I will not be around as often as we normally will, because both of us are going to be going on vacation. I think David's going here as soon as tomorrow. My vacation will be kind of the week after that. But the point is, you won't be hearing from us in these free videos quite as often, and so it's especially important for you to kind of stay glued to your emails whenever we do have the off chance to produce these videos. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join us at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And with a day like July 7th, where you got a 7 and a 7 in there, throw one more 7 in and you got some good luck there for those of you gamblers out there. And it did end up on green here for us today. As you can see, a lovely day for stock market participants, up well over 1%. And you can see largely why that's the case. All of our biggest squares and rectangles are lit up in that nice green color. Some of them quite bright as well, including Tesla, up 5.5%, Alphabet up 3.5%, Nvidia up 4.8%. Semiconductors in general actually did pretty well today. Intel was up 3%, Qualcomm was up 6%. Texas Instruments was up 2.5%. Some of you saw me tweeting about that one here either yesterday or the day before, where they had finally sold off enough to touch the blue line on the dividend stair-step chart that you guys oftentimes see me use for some of our trade application examples here. And that was the first time for Texas Instruments in a couple of years. Stock has now rallied 10 straight dollars since I posted that on Twitter. So again, make sure you're following me on Twitter throughout the day. You just never know what gems you might stumble across. AMD, another very well-known semiconductor company, up 5% here today. We saw Apple up 2.4% and Microsoft up 0.82%. The Apple one, unfortunately, I do have a bearish trade on that from one of these videos a few weeks ago, and it is actually the only trade that I've done here recently that has has been losing any money. All the rest of our trades that I've done are in the positive column, so I am happy to report that. Now, speaking of which, some of you will recall that the trade I did on Tuesday's video was for a short selling idea on Xcel Energy. And wouldn't you know, it's hard to see because it's kind of being covered up by the utilities label here, but if I kind of sneak my mouse in behind it, you'll see that it was down over 2% today. And believe it or not, that was actually the worst performer in the entire S&P 500 today. So happy to at least get that working in my direction. It did bounce a little bit yesterday, but with today's drop, it is once more in the positive territory for that trade, where I want it to go lower, whereas a lot of my other trades are bullish and I want them to go higher. So it worked out pretty nicely here today for that particular one. You'll also notice that we had some red here in the consumer staples today. We had a little bit of red in the telecommunications area today. We had some red in the healthcare area, especially kind of big pharma. Now, today was definitely a risk-on type of a day. And remember, a lot of these, like Eli Lilly, Johnson & Johnson, Merck, Bristol Myers, United Healthcare, those kind of have been stalwarts during some of the most difficult markets that we've seen in 2022. It's kind of been the place to go hide when everything else is falling all around you. And I think it makes sense then today that folks are willing to take on risk once again, that they're probably going to sell those areas that they had previously sought out as safety trades in order to finance their trades in the riskier areas. Now, how long that trend lasts is anybody's guess, but I think that it wasn't an accident that those areas were down today after having done so well this year. We're starting to see more and more of a push into some of those growthier and more speculative areas. Remember when I was with you on Tuesday, I was joking about Seinfeld and George Costanza being the opposite day. So we've already been kind of sensing this transition taking place underneath the surface here for a bit of time, where it seems like some of those areas that were once working when the rest of the market was getting destroyed are now starting to give up some of those gains, and instead those areas that had already been destroyed by the stock market are now actually catching a bit of a bounce. You'll recall that I'd kind of discussed the ARC Innovative Fund with you guys on Tuesday, and that particular area was roaring higher once again today. So those innovative, disruptive companies doing quite well. One of them could very well be this Moderna I see right here in front of us. Of course, well known for a lot of folks, especially here in the United States, where we effectively had a couple of vaccine choices. We had Moderna or Pfizer. You could say Johnson & Johnson was in the mix as well, but Moderna kind of came out of nowhere to become a very important healthcare provider here, especially in the United States, and they had a great day today, up 8%. You'll also notice that energy did snap back, so not quite as much of an opposite day as we had on Tuesday. That day, not only were the big pharma companies down along with utilities, but also energy was getting hit hard on Tuesday. Today, all of the energy stocks were up. Now, interestingly enough, the utilities largely still closed lower, right? So, one of those things changed here today, and it was energy that did that. You can see that the vast majority of these squares here are in the green, so our market breadth numbers are sure to be pretty strong. Let's go ahead and check in on those here now. Give me a second to pull up the other part of the platform. There we go. And you can see I've got the visualize area of the Market Watch tab pulled up, where I've got the S&P 500, and there were 396 stocks of the S&P 500 that closed in the green here today, so that's good for about a 79% hit rate there. So remember on Tuesday, we had a closer to a split decision. It was closer to 50-50. There were a few more losers than winners that day, but they were right around the same general vicinity. This is an overwhelming day today where the winners easily outpaced the losers, and that's a positive sign. Not only that, but wanted to share with you, of course, this chart. Whenever we have a market move of 1% or more, I like to show this chart 6D to you guys to kind of give you a sense as to how volatile trading has been at any given moment in time. And as you can see, we've got this nice green bar stretching towards the sky representing today's price activity. And you'll notice that it does stretch well past that blue 1% level. Didn't quite get to 2%. It actually kind of stopped right between those two, exactly at 1.5% increase. But what I wanted to mention was that this was actually our fourth straight up day. And that hasn't happened all that often, especially in a calendar year like 2022, where we've seen some of the worst trading in history. The first half of the year was actually the worst first half of the year for the stock market in my entire lifetime. So that kind of puts things into perspective for you. So you can imagine that when trading is extremely aggressive and bearish, that you don't have a whole lot of win streaks that you end up putting together, but we can count them out. 1, 2, 4 straight days to the upside for the S&P 500. And as I go back and look for when the last time that happened, it was back here kind of at the end of March. So it's been more than 3 months since we've been able to make the claim that we've had 4 days in a row to the upside. Keep in mind we do have some important jobs/employment information being presented tomorrow. That always has the possibility of jolting the markets. And therefore, you have to be kind of babysitting your portfolio there. But the good news is it seems like the really heavy-duty selling that was kind of commonplace a few weeks and months ago has a bit subsided, and it seems like market participants are willing to take on a bit more risk once again. So hopefully it doesn't result in some sort of a devastating sell-off tomorrow. But then again, if we give some of this back, it wouldn't be all that surprising either. Again, because we have gone up 4 days in a row, we're probably due for a sell-off of some sort, whether it happens tomorrow or early next week, who knows. But the hope is that you don't just erase this entire move, right? If we're all of a sudden we melt down tomorrow by like 4% and we take out these lows from last week, that would be a very unfortunate set of circumstances and would lead you to believe that we are still searching for a bottom. On the other hand, if the market likes what it sees tomorrow out of the jobs numbers, then perhaps we can actually start breaking higher. And as you can probably see by the price action up above, if you overlaid like a line over the top, give me a second, I'll see if I can find one here. So let's just do a trend line, and you can kind of see that if it depends on how you draw it, of course, that's always the case with technical analysis, it's in the eye of the beholder, but you can see that as I lay a trend line over the tops of the candles over the last, let's call it 2 to 3 months, that we're in this defined downtrend at this moment in time. But where we stand at this exact moment in time is just on the underside of that declining trend line. And so if we had a big move up tomorrow, let's say a 3 or 4% move tomorrow, you could start seeing market participants get a bit more bullish again, with that mindset that you've broken through that previous resistance, and now you've got that opportunity to start gaining in on some of those higher levels that we experienced here, over the past 6 months or so. So let's keep our eye on that possibility. We're kind of at one of those make or break moments right now from that particular perspective. You can see that the VIX naturally closed lower today. It ended at 25 here today. Remember, that is typically the case. When the market goes higher, the VIX tends to go lower, and that relationship did hold true here today. All right, let's go ahead and now take a peek at our foregrid. This is chart 4B for those of you that are following along at home. And a reminder that this particular foregrid here effectively sets the posture that we use for these market outlook videos. It is using what's known as the market forecast technical indicator that you can find on the Thinkorswim platform. Now remember, when you pull it up, if you're not a member of Market Scholars, your charts are likely not going to look like this because we spent a lot of time developing these specific computer codes and think scripts. But they will at least give you that technical indicator that you can put in a very plain fashion down at the bottom of your charts there if you so desire. But the market forecast technical indicator is something that is unique to TD Ameritrade and Thinkorswim. So if you are, let's say, a Vanguard client or a Fidelity client or Interactive Brokers or something, you're not going to find that technical indicator over there. So it is kind of unique, which makes this video perhaps a little bit more unique. Remember, David and I used to do this video, or a video very similar to it, when we used to call it the market forecast video, back when we worked with TD Ameritrade. So some of you have been with us for many, many years at this point and know that this is kind of the driving notion of why the video even exists, is to kind of look at the market through the lens of the market forecast technical indicator. And when you're looking at these charts, the background colors of the charts will help you understand what the current posture is using the intermediate line. The intermediate line is the green line in the indicator down below. So you're going to have a blue line, that's the near-term line, a red line, that's the momentum line, and then the green line, which is the intermediate line. And they represent different time periods, with an intermediate line representing kind of the mindset of being in trades for months, whereas the blue line would be a shorter term mindset where you might be in trades for weeks. And then the red line is super short term, where you might be like a day trader, just in and out of trades regularly, from one day to the next. So unless you hear David and I say otherwise, if you just hear us say generically our posture is X, Y, or Z, what we are referencing is specifically that green line there. But if you ever do hear us say the near-term posture, then we are, of course, talking specifically about the blue line. But if you just hear us say posture in general, what we are referencing is that green intermediate line. And as you can see, we have some good news to share on that front. With this 4-day rally, we now have bullish postures across the board. Now notice that the background colors of the charts are light green. They're not dark green. The light green signifies that we have what's known as a weekly bullish posture. It's not considered strongly bullish. And I kind of think of it like you're planting seeds. You've got the fertile ground in front of you, and you're seeing the opportunity to plant your seeds after perhaps the winter has passed, right? We've gone through a pretty ugly winter in the stock market and perhaps in the cryptocurrency market here lately as well. But the possibility of the winter having passed, and now we're about ready to embark upon planting those seeds. Now, we don't know if those seeds will have been lost to rot or mold, or maybe the squirrels will steal them, or perhaps winter will come back, right? Sometimes you plant seeds in, let's say, April, and you have one last terrible snowstorm after the fact. So think about the weekly bullish postures as you planting seeds without quite knowing whether they're going to lead to become, fantastic yield-bearing plants and trees and things like that. Once you get to the darker green background color, then it's suggesting that the bullishness is more persistent. So right now we're kind of in that early infancy stage where we want to make sure that we're willing to go out and take bullish trades just in case it does lead to some spectacular growing down the road. But we also have to be mindful of the fact that this is the time period where you probably are going to have the most amount of head fakes and whipsaws, and so you have to be prepared to lose as well when you are planting those seeds. And so right now we do have weekly bullish postures across the board on all 4 of these major U.S. equity indices. Now be aware that only one of these is now showing us enough strength to also come with a green moving average, and that is the NASDAQ down here in the lower left-hand corner. Notice that the NASDAQ has a green line right here, or a tip on that line, and for those of you that aren't familiar, that's a 30-day moving average. And what a green line signifies on that is price is above a rising moving average. Now you'll notice we had one other day right here within the last couple of weeks on June 24th where we also had a green line for one day as the NASDAQ was able to close just barely above that rising moving average, but the very next day it gave it up. So it was only there for one single day. And then if you go all the way back 3 months ago, exactly 3 months ago here on April 7th, you also had a green line at that time. But otherwise, you can see that the obvious theme of this market for the last 3 months has been down, 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 right? Upper left to lower right. And so this gives us a little bit more optimism that, hey, the bulls are finally getting a little bit more resilient. They're actually pushing back on the bears, right? For a while, it just kind of felt like the bears were steamrolling the bulls every single chance that they got. But what we are seeing now is some semblance of strength, at least out of the NASDAQ composite. You'll notice as well that I think is helpful in this particular case that if we can go up a bit more and close higher tomorrow on the NASDAQ, let's say we close above the high of the day on June 27th, and that high was 11,677. So if the NASDAQ can rise about 50 points or more tomorrow, remember today we rose 250, so it wouldn't be unheard of if we could get another 50 tomorrow. If that happens, I think that would be a pretty important set of circumstances, because all of a sudden you could make the claim that we would then have a set of higher highs and higher lows. And, those are somewhat fleeting when you are in difficult market environments like we've found ourselves in here more recently. So I think it is a positive sign that we had this reflex rally back to the 30-day moving average. It then looked like it was going to roll over. Remember, it was down 4 days in a row. But the good news is it did not breach that prior low. Instead, it stabilized there and has now gone up 4 days in a row, setting up that possibility that we might look back at that and say, this was a low, this was a higher low, this was a high, and maybe this will be a higher high. Now, that doesn't necessarily guarantee that we're going to be off to the races either. This is a work in progress, but these are the types of things that we're looking for that will help us feel more comfortable and confident in the market on the positive side of the equation for once. And it's been a while since we've been able to say that. Now, keep in mind that we'd like to stay above that 30-day moving average for a longer period of time than just a day or two along the way. You'll notice here that, as I mentioned back here at the end of June, we were able to get above it, but the very next day we closed below it. And even if you went back to the time before that, back here in early June, we were able to get above the moving average, but the moving average was still falling. Notice there was no green moving average during that time. So sometimes the price was above it, but the moving average itself was falling, and that would be represented by the yellow color of the moving average there. But the point being, you actually had some decent resilience there as well. We didn't really make much progress outside of that first 3-day rally right there, but the fact that you were able to go sideways was somewhat promising, and that's why this move lower was so disappointing after that. So this time around, if the market wants us to take it seriously, we'd like to see a little bit more separation than what we experienced over here in late May, early June. At that time, you can see we were basically hugging the 30-day moving average the entire time. We didn't really get any true separation from it. So that would be helpful tomorrow as well. If we could end the week with a 50-point advance or more on the NASDAQ composite, you would then have a little bit of separation between where it's trading and the 30-day moving average. On the other hand, if it sells off tomorrow, there's a good chance that it'll be hugging the moving average, and then that sets up the possibility that it's going to end up acting like this one over here, where it just could not get away from that situation. So I have a little bit more optimism around it this time around, simply because of the things that I'm seeing that I had mentioned to you before. Securities like the ARK funds have been doing so much better, with ARK up 6.5% here today, and many of those work from home stocks and other innovative and disruptive companies doing pretty well. So I hope that bodes well for the NASDAQ composite in general, that this is a legitimate bounce that's taking place here, and people are embracing risk once again. But you know how this thing goes. One bad piece of news out of left field could end up upending this whole thing. So we've got to always be careful not to get too ambitious with our thoughts. But I will say it is acting better, and we've got work to do. We're a long ways away from saying that this whole malaise that we're going through is over, but we at least have some positive signs here to work with, so we'll take what we can get. So the NASDAQ is the only one that is currently trading above its moving average at all, and it just so happens that the moving average is moving higher, which is an even more positive statement. The other three charts are still trading below their falling 30-day moving averages at this moment in time. Now, to put a ribbon on it, as I mentioned before, the S&P 500 was up 1.5%. The Dow Jones was up 1.12%. The NASDAQ was up 2.28%, and the Russell 2000 actually was today's biggest winner. It was up 2.43%. So it was good to see those two bottom charts leading, because those are the more speculative areas of the market. And again, another sign that risk appetite was a little bit higher here today. All right, let's go ahead and step away here to the internet briefly. I always like to get a chance to say thank you to those of you that help support these presentations. Remember, they are completely free of charge for you, and they are completely voluntary and discretionary for us as to whether we can do them for you or not. And we always have to ask ourselves each day that we're scheduled to do it, do we actually have the 3 hours to commit to putting this video together? And the way that you can let us know that these videos are useful and appreciated and you want us to continue them as often as possible is for you to click like for us on Twitter. In this case, I've come directly over here to my Twitter timeline, and remember, David and I usually pin our most recent update of the market outlook at the top of our timeline. And you can see that the last time I did the video on Tuesday, 102 of you took the 5 seconds out of your day to click like there for me. And as long as we're up and over 100 likes, I'm happy to do a full-length video for you, including a trade application example. If we're under 100 likes, then I would just do a 15-minute video and I would already be done by now. But instead, I'm going to continue to do a full-length video for you here today because of the final 3 people that clicked like. Remember, if you 3 at the end didn't click like, this video would already be over right now. So that's how close we were to 100 this time around. Let's try to get ourselves a little bit more separation the next time, because remember, next week we're going to be really light on the market outlook videos because David is going to be on vacation. He's going to be far, far away, taking an airplane to a beautiful place, and I hope he enjoys himself. He certainly deserves it. But I will be with you next Tuesday. The question is, will I be giving you a full-length video or will I be giving you a 15-minute video? But that Thursday after that, I will start my vacation. So next week, I will only be doing the video one time. And so if you want me to do a full-length, longer video, then I simply urge you to take the 5 seconds out of your day to click like for me there on Twitter. But thank you to all folks that did that for me this last time around, including Ron and Tat and Sedona and Roger and Jerry and Greg and Trunk and Roger and Irene, Margie, William, Paul, Irene, Dave, Tom, Kirk, Sheila, Lazy Boy Trader, Paul, Dr. Bob, Dale, Ray, Gerald, Ann, T-Fib, Tom, Surendhar, Rick, Violina, Jim, Austin, Rich, Ken, Dave, Sonia, John. I can't go through all of you, but every so often I like to have you see your name in the spotlight, so to speak, because I do see your notifications coming through that you're helping support the video, and I want to personally thank you for doing that for us. It means a lot. It helps us get the word out about our business better than we would be able to on our own, which is the whole point of why we use social media so heavily. So thank you, thank you, thank you. We really appreciate that. Also, earlier today, I taught my question and answer session, so I spent 3.5 hours with my students, as is typically the case. We had some really good conversations today where we talked about a cash-generating machine and some of the ways where we can find some formulas and some calculations to have some inputs go in and then outspits a number of what that stock should be or could be worth here in real time today. So we spent about an hour, a little bit more than that, talking about payback rates and some of the other, the Gordon dividend models and some of the things like that. I also got a question about looking at SAP, which is a very interesting German software company, as a potential dividend growth investing candidate. It's a annual payer, so it doesn't pay quarterly like most companies here in the United States, but it does have a lot of attractive features to it. Now that it has sold off with so many other technology stocks, it actually has a pretty reasonable dividend yield if you're willing to invest in foreign stocks. Now, I know we have a lot of viewers here of this YouTube video from around the world, so forgive me if I'm speaking directly to US-based investors when I say something like that. But as you can probably imagine, our biggest core audience is still here in the United States, but we do appreciate the rest of you out there as well. I also got a question about chart 2C, one of our dividend growth investing charts, and how to kind of think about how to use it, how to visualize information and get greater insights as to whether stocks are particularly attractive to you or not. I also got a question about stock buybacks and whether it's useful for us to consider those when we're thinking about selling puts on those dividend growth investing stocks. And then I got a question about how do you roll and where do you roll. So some of you that are our premium members know that I've been rolling this MO stands for market outlook. So some of you recall that I did a sold put trade on Best Buy quite some time ago, and I've been consistently rolling it as the weeks and months have been rolling on because Best Buy has continued to do quite poorly. So I've rolled it all the way down to September 62.50 at this point, getting a credit each time that I've done the rolls. So anyway, I had a question about how to handle that if somebody else was doing slightly different strike prices and different rolls, and kind of how to think about that business compared to a bunch of other big box retailers that are also very well regarded dividend growth investments. So if you have an interest in any of those topics and you're a premium member of Market Scholars, feel free to go over to our trading rooms calendar up here at the top, and that recording has now been posted. And I believe because of David's upcoming vacation, he would normally have been doing his Q&A class on Saturday morning, but instead he's actually doing it probably right now while I'm giving this presentation. And so I imagine he'll get his recording up and posted for you guys to kind of work with over the weekend as well if you're a premium member. Also, let's have a chat here about the factor selector tool. This I tend to get posted on Wednesday morning, but it is using Tuesday night's closing information, and we use it most specifically in my factor-based swing trading class. You can see here that low volatility managed to hold on to the #1 position from a factor perspective. This is their third straight week up at the top, and remember, prior to that, dividend yield was up at the top for 7 weeks in a row. So it seems like there's a true transition that's taken place here between those two in the last month or so. And then the big story was how momentum fell off of a cliff. Now, momentum is an interesting beast because it kind of just tries to change its stripes and latch on to whatever theme seems to be working at any given moment in time. So one of the conversations we had in my class on Wednesday was specifically around the BlackRock ETF for momentum, which is ticker symbol MTUM. And their prospectus states that they can only do a rotation or portfolio turnover twice per year. And when they do that is in late November and late May. And last year, in late November, the NASDAQ was just topping out at that time. Now, we didn't know it at the time, but that was it. That was the highest the NASDAQ was going to go. And then we were going to have a very terrible 30% meltdown after that. Well, anyway, when that particular MTUM portfolio rotated into what was strong at that time, it basically rotated into all of those NASDAQ types of stocks, your big tech stocks and communications and, discretionary stocks and that sort of a thing. Well, then fast forward 6 months, we know what happens after November. The NASDAQ absolutely tanks, and most of the stocks within MTUM tank as well. And then guess what? They finally get to rotate, and they do it at the end of May. And so what would they rotate into? Naturally, whatever's hot at that particular time. What was hot at that time? Energy stocks, oil and gas, along with utilities and staples and a handful of others. And wouldn't you know, it was right around that time, or shortly thereafter, that the oil stocks were just about to top out and then drop their own 25 to 30% in just a few weeks since then. So in that particular case of MTUM, and remember, I'm using 4 different momentum ETFs to kind of balance that type of effect out. But in the case of MTUM specifically, boy, their timing couldn't have been any worse. And they must just be thinking over there that they have the worst luck on the planet because as you can see, those oil stocks and everything are now pushing momentum lower. Last year when they could have used the momentum stocks, or I should say oil stocks, late last year into early this year, they didn't really have them. And they didn't get the benefit when they were rallying strongly. And then finally when they rotate into them, those are the exact stocks that roll over. And so they just seem to not be able to buy a break there in the momentum / trend trading world. All right, let's go ahead and pop back on over here to the main part of the platform now and do some 12 grid analysis. Starting with chart 5A, this is our asset class 12 grid. And as you can see here, we do have maybe a couple more, 1 or 2 more green charts on the board. The one that there was actually 2 that were not green when I did the video with you the last time on Tuesday, and those 2 are up there at the top. The S&P 500 represented by SPY and preferred stocks represented by PFF are now thought to have had weekly bullish postures. Now notice down here in the lower left-hand corner we have the US dollar, and then here we have foreign bonds kind of in the middle. Those are those darker green charts, and those represent this strongly bullish intermediate postures. And I think that definitely makes sense in the case of the US dollar. As you look at that chart, that's a very strong chart. In the case of foreign bonds, it's not the greatest looking chart. I think you're just kind of giving the benefit of a pretty strong bounce off of the bottom, and with interest rates cooling off a bit in the last, let's call it 3 weeks or so, you're kind of getting the benefit of the doubt there. But I think it's too early to say that this will be kind of a runaway winner here. Could it turn into one? Of course, anything can happen. But as you look at this chart, you can see that that 30-day moving average line is still decidedly tilting lower, despite this stock now, or this ETF now, trading above it. So with these other 3 charts, we kind of have to be patient and wait for the trends actually to develop. With the US dollar itself, the trend has already developed. We've already been talking about it for a long time, and it remains strong at this point. The question is it too strong? And is there a chance that it could roll over a bit here in the near term? And I think there is a decent chance of that. This has been a spectacular move for the US dollar. There's a likely chance that it can roll over. Now, whether it comes all the way down to the 30-day moving average or not is anybody's guess, but I could definitely see it kind of coming back here to where it was trading on June 14th and then again on July 1st before you had that big gap up there. So it kind of feels to me like you've gone a little bit too far too fast, and there's a decent chance that it stays within its trend, but it just can't stay this darn strong. It's got to kind of give a little bit of those gains back. In terms of the other charts, they do remain pink, and most of them dark pink, meaning that we have a strongly bearish posture with them. Now note that the selling in gold has gotten so bad that you actually have back-to-back oversold daily clusters on that chart right now. So I think there is a chance for gold to have a snapback rally. Now that does not mean that I expect it to go into an uptrend from here. It just means that this has been like a cascading waterfall type of a sell-off that we've seen in gold in the last several days. In fact, it goes back a couple of weeks. This is pretty dramatic. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row to the downside. That's kind of insane for a big liquid market like gold. So, will we get a little bit of a snapback here? I think it's possible. I think that's worth investigating for doing something like a bull put spread as an example, where you give yourself a little bit of flexibility by selling the strikes lower than that. I don't know if I'd be the guy that's going to be really aggressive buying calls on something like that, but I think selling a bull put spread could make some sense with these extreme oversold situations here. So look for a potential bounce back in gold up back towards its downtrending 30-day moving average, and then we'll reevaluate at that time. If it looks like it's going to roll over again, then that's where you could maybe put on some bearish trades again. On the other hand, if it bursts straight through that moving average, maybe it's got more energy than we're giving it credit for. But right now, I don't think I'm willing to give it the benefit of the doubt. I'm willing to say, yes, we probably have a decent chance to work our way back towards that moving average, but once we get there, all bets are off. So gold has been very interesting to watch there, as has oil. Now, both gold and oil were up today. Gold was just barely up, 0.06%. Oil was actually up pretty substantially, up 3.91%, which is why you saw all those energy stocks on the heat map earlier light up there in green probably. But you can see that despite the nearly 4% move in crude oil here today, we are still down below a falling 30-day moving average, and we still have that strongly bearish intermediate posture according to the market forecast. So here's another one where if you're lucky enough to get this back to the moving average, I think you got to start thinking about lightening up on any of your long oil positions or establishing new bearish trades at those levels. Because this has been a pretty big disaster here in a very short amount of time. Again, poor MTUM and that momentum fund that I mentioned before, late May was somewhere right around this time period, and you really only had about maybe 4 more days of upside action in oil before that whole thing just collapsed upon itself, and MTUM got stuck holding the bag probably. And maybe that changes, maybe it gets back into gear. Oil, of course, is driven by a lot of geopolitical news, and so you never know when something terrible happens in either Russia-Ukraine war or something else in the Middle East, but there's always that possibility you could have some big dramatic movements as a result of how it acts to global news. One of the bigger stories here recently has been the 10-year Treasury yield. You'll notice that it has had 2 days in a row to the upside. So remember when I was with you last on Tuesday, it was that day, and I was talking about how we've had this 4-day sell-off and how dramatic it's been. Well, you've snapped back part of that move so far, but where you're at right now still is on the underside of the 30-day moving average. What is kind of interesting about the move is it did stop short of breaching the lows of interest rates back here in late May. So for those of you that want to be bullish on interest rates, maybe you've got that in your camp. But it could take some time to sort all of this out. What we know right now is that the 10-year Treasury yield closed today almost exactly at 3%. How about that? That's a very important number. So we could also see a situation develop through the rest of the summer where the 10-year Treasury wants to kind of hug the 3% level and just kind of stays there and frustrates both the bulls and the bears as it goes nowhere. So that's a possibility as well. But that's been one of the bigger stories of 2022, so worth mentioning that we're back above the 3% level just barely after being below it for the last 3 or 4 days. Bitcoin had a nice day. It was up about 6% here today, but remember, Bitcoin and so many other cryptocurrencies have been absolutely decimated. And of course, there's been terrible news from an industry perspective there as well, with a lot of the Bitcoin exchanges like Voyager and Celsius and some of those basically freezing customer assets. It's been a big old mess for folks involved in that space. But Bitcoin itself can be traded despite the difficulties in the industry. And today, when it was freely traded, it was freely traded to the upside. And I think in my head, that makes sense. Again, given the fact that today was definitely a risk-on day where the Russell 2000 and the NASDAQ did much better than the large cap indices, where you had ARK Innovation Fund up 6% or whatever it was. This was a day where people were willing to take risk. And when you're willing to take risk, then one of the areas that is considered the riskiest is the newest asset class out there of Bitcoin. So you probably have the potential for a pretty aggressive move higher in Bitcoin if risk appetite remains high in the immediate near-term future for markets in general, because it has been so oversold. So Bitcoin did close just a bit under 22,000 here today. Let's go ahead and now take a look at our sectors, and that is chart 5C for those of you following along at home. And as you can see, we do have 2 pink charts on the board, but all the rest are green. That's a vast improvement from what we were looking at just 2 days ago. And remember, that will happen. When you're in the midst of a 4-day rally like we are right now, that will have an impact on whether the technical indicators you're using are going to show up more bullishly or more bearishly. And obviously, when you're in the midst of a 4-day rally, the technical indicator is likely to point you to more bullish indications, and when you're in the midst of a 4-day sell-off, it's going to likely push you into more bearish conditions. So anyway, it makes sense that these colors do change. That's the whole point of us doing the videos as often as we do, is to try to keep you abreast of those changes. And so that's a positive sign in its own right, just looking at this 12 grid and seeing, hey, there's a lot more green charts that are showing up here just 2 days later. That's a more bullish feeling about the market at this moment in time. Now you can see that the 2 areas that do remain in the red are materials and energy. Both of them not only do have the strongly bearish posture, notice that both of their intermediate lines are at 10. They're both rising, but remember, because the numbers are below 20, which is basically the lower reversal zone. So for instance, when I right click on the chart, go to maximize the sell, you can actually see the indicator down below, and you can see down here with your own eyes that that line, that black line right there, is right at 20 for the lower reversal zone and 80 for the upper reversal zone. So basically, when the green line is in the lower reversal zone, we consider that to be strongly bearish, whether the line is rising or falling. Once it emerges up and out of the 20th percentile, let's say it goes up to 21, then we start looking at that as though it would be considered weakly bullish. Whether it gets there or not is anybody's guess. You're still down here quite far. So even if energy stocks were up a whole bunch tomorrow, there's a good chance that you still would not switch to a weekly bullish posture quite yet. It's probably going to have to, work on it for a week or so if that is to be in the cards. But remember that those two areas, materials and energy, are the two that are kind of at the top of the sector cycle as well. And so it's kind of interesting that they're moving in unison with one another at this moment in time. They're also tend to be more inflationary types of plays as well. And maybe this is telling us that inflation will be cooling off. And we'll just have to keep our eye on that possibility. And remember, when commodities prices are going down, so think about the copper miners and the materials and the oil drillers in the energy. If prices of commodities are going down, then that tends to benefit the companies in the other sectors that are using commodities as input costs in order to make products to sell to consumers. So in a way, this is kind of what we want to see in this environment right now. We want to see commodities cooling off, because if commodities don't cool off, then Jerome Powell is just going to keep on raising interest rates from here until eternity. And the market is scared of that, and it should be. That's a negative thing, because it cuts into profit margins for publicly traded corporations. So this is actually a positive sign, whether you recognize that or not, right? If you have a really energy and materials heavy portfolio, you're probably not appreciating the activity here in recent weeks. But if you're more of a market generalist, this is actually a positive thing, all else being equal, and you're starting to see the positivity show up on the other charts with all those green background colors. In terms of who today's biggest winner was, it was indeed energy, with the big snapback in oil prices. Oil companies also snapped back, so that seemed to make sense there. We also had a big day out of some of the more growth compounding areas as opposed to the cyclicals, including technology up 2.07% today and consumer discretionary up 2.58% today. So those were pretty big moves. In fact, with consumer discretionary, notice that we have a green moving average here. Right? The only other sector that has that at this exact moment in time is staples. I think healthcare is going to probably get there, but at this exact moment in time, healthcare has the yellow moving average. So, discretionary all of a sudden has stabilized pretty nicely. Remember, discretionary was one of the worst places to be in the first half of 2022. Those retailers have just been blitzed. And so the fact that they're starting to stabilize here is helpful. Now, we do have to remind ourselves that XLY is a market cap weighted version of discretionary. So it is very much driven by Tesla, Amazon, and Home Depot. And so it's not necessarily saying what the average experience is for the average discretionary stock, but it is at least a positive sign there for a very important sector within the market. So those were some of our bigger winners to the upside today. The losers to the downside, really we only had one sector that was underwater today, and that was utilities. And as I mentioned before, at least in the case of Xcel Energy, the bearish trade I did on Tuesday, I'm at least happy about that particular one, right? But despite the very small loss of utilities here today, it does remain with that green background color, so it does still have that bullish posture, but it is still below a falling moving average as well, so you could really see it go either way at this point. So I don't think the story has been quite written on where that one's going quite yet, so let's keep our eye on it. In terms of the stronger charts on the board, notice that they are all stacked at the bottom. The only three dark green charts are the ones on the bottom rung. And remember, that bottom rung is effectively your defensive sectors that are out there. So that's maybe one of the negative aspects of the market right now, is that despite us having a couple more of these risk-on types of days here recently, we haven't seen enough of them on an intermediate time frame yet to kind of offset the strength that we've seen on a relative basis in the defensive areas. Because remember, if we're going to have a rip-roaring rally in front of us, we don't want it to be led by utilities, staples, and healthcare. What we'd want is for it to be led by communications, technology, and discretionary. So whether that's in the cards or not is anybody's guess, but as I mentioned before, at least we now have one more bullish instance there that we can talk about, with discretionary now trading back above its moving average. And as you can see with communications and technology, you're basically sitting right on the moving average right now. So it really wouldn't take much for those to burst a bit higher as well. And who knows, once things get going, we might really start revving to the upside, and maybe they will take on a leadership role. But at this exact moment in time, it is still the more defensive areas that have had a bit more strength that are out there. Now, speaking of which, take a look at healthcare down here in the lower left-hand corner. Healthcare has one of those dark green background colors. Its intermediate line is at 69 and is rising, telling us that we have a strongly bullish posture. And you can see that we are well off the lows in healthcare since back here on the 16th. Now, we didn't talk about the sector selector earlier this week, but if I come back over to the internet here briefly, I just wanted to show you that healthcare has moved up into the number 3 position. This is the highest ranking for healthcare over the last 3 months of this rolling 3-month graphic that I have here known as the sector selector. So that is telling us that there is vast improvement taking place under the surface for healthcare stocks, at least on a relative basis compared to other sectors. And you can see we've really advanced pretty nicely in just the last month. At the beginning of June, so basically 1 month ago, it was ranked 6th. We've now worked our way all the way up to number 3. In addition to that, some of you saw me tweeting about the CRISPR types of stocks here recently. Some of you know I have an interest in that space. I think it's very interesting and innovative and could really make some nice changes around the world, depending upon circumstances. It's also highly, highly speculative, highly, highly risky, and none of them actually make profits, so they could actually go bankrupt. So you have to be very careful with them as well. But the reason I'm bringing that up is CRISPR Therapeutics actually went green on the year. And remember, CRISPR Therapeutics is the type of company that would be in the Cathie Wood ARK Invest types of funds that are out there, innovative, disruptive. Currently don't make any profits, but hope to change the world in the future and hopefully make some profits along the way at that time. And so it's very interesting to me that in a year like 2022, when you've got stocks that have been absolutely blitzed, like DocuSign and Zoom Video and Teladoc and a lot of those other Cathie Wood types of stocks, that CRISPR Therapeutics is actually green this year. I mean, think about that for a second, because, most of the companies that are green this year, if they're lucky, are in the oil and gas space. And even that's not a layup the way it once was with the sell-off in that particular sector here recently. Otherwise, you've got the big pharma stocks like Merck still in the green. But most of the riskiest cohort out there are not just red, they are deeply red. In some cases, down 50, 60, 70%. And then all of a sudden you have CRISPR Therapeutics is actually green on a year-to-date basis. So that's definitely been catching my eye here recently. And I've even seen the improvement before this week. Remember, this stock selector tool I update on the weekends. And so, this is based upon last Friday's numbers, and CRISPR is up about 20% this week. So I'm certain that these numbers will improve even further when I put this stock selector tool together again tomorrow night. But you can even see right here through the numbers themselves that CRISPR has increased from being in the red, negative territory in April and early May to jumping straight into the green, and now is ranked 82nd out of 1,000 stocks that I track on a price strength basis. And again, this is underselling it, because I'm certain that when I redo the rankings tomorrow night, it will have moved up dramatically. So, and that's just one instance of it. There are a lot of other healthcare companies. There's another one called Halo that I know has done quite well. Of course, Seattle Genetics has done very well, but that's more on takeover rumors. But the point being, there are a number of healthcare stocks, and it's not just the big major pharmaceutical companies that are doing well, like was once the case. Now we're actually getting the more speculative kind of biotech areas involved as well. you can see over here that the biotech industry is ranked number 8 out of 68 that I track. So, for a while there, that wasn't the case. Biotech was one of the worst sectors, or I should say industries, that were out there. So healthcare itself was doing okay, but biotech was doing terribly. But all of a sudden, many of those biotech stocks are really firming up here all of a sudden. In fact, today's trade, I nearly took a trade on the biotech ETF, but I couldn't get filled on it. So I actually placed a trade, but the market maker would not fill me. So I had to move on to a different trade, which is why some of you saw my trade got done later than I typically try to get them done here today, because I was actually trying to get filled on a separate trade. But I'll show you that real quick here. Back to a normal chart, if I pull up ticker symbol IBB, this is one of the biotech ETFs out there, the iShares version of it, and you can see what I mean. I mean, this biotech ETF was at 104 here just like 2 weeks ago on June 16th. We've gone from 104 up to 125, and along the way, we've gone from being an underperformer versus the market, right? There's the dotted line of the S&P 500 and biotech underperforming it, to going straight up, and now the price being way above that dotted line of the S&P 500. So now it is an outperforming industry on a 3-month basis as well. And of course, you can see some very aggressive candles here along the way. Look at all those open body candles, and most of them closing near the highs of their days. Not only that, but you took out that important resistance area that was set up here between the end of May and the first or second week of June there. So this has been something that's definitely been catching my eye, and when something catches my eye, I try to share it with you guys here as my audience, and of course, tweet things out like I did with CRISPR here the other day to let you guys that follow me on Twitter know what's on my mind, what's catching my eye. And biotech is definitely hot right now, and not a lot of people are talking about it. There are some people talking about it, but there's not a lot of people, right? It's not the talk of the town. People are still stuck on what's happening with oil prices and interest rates, but somewhat quietly underneath the surface, we are seeing a rip-roaring rally in biotech. So let's go ahead, and since I couldn't get filled on this, and by the way, what I was trying to do was a bull put spread on IBB, but as I mentioned, the market makers just couldn't fill me at the price that I demanded, so I had to move on to another healthcare related company. And so I tried to look at what were some of the strongest healthcare companies of today, and one of them that caught my eye was this company called Progeny. And this is ticker symbol PGNY. It's probably not a company that many of you have heard of before, and as you can see, it's been a vast underperformer to the S&P 500 over the last 3 months, but I'm starting to wonder, is that about to change? You can see that this stock was stuck in a pretty significant downtrend for basically the entire 3-month period up until today, right? Exactly 3 months ago was the last time that it was trading above its moving average, and then every candle in between that time period and today, you were below the moving average. But with today's big move, and this stock was up about 9% here today, it burst well above that moving average, suggesting that it probably stands a better chance of staying above the moving average, right? If it was only above the moving average by, let's say, 50 cents or something like that, it could easily roll over and be back below it tomorrow. But because you're giving yourself so much separation there, sets up the possibility that this one is a move to be believed at this point. The other thing that I liked about it and why I chose this one, because there were a lot of healthcare stocks that looked like this today. I could have really gone with any number of them. But one thing I did like about this one as well is that today's candle was very aggressive, started low, ended high, up 9%, had pretty decent volume. It wasn't, explosive volume, but you were at least at average volume here today. But importantly, where it closed caught my eye. Where we closed on this was above the prior high that this thing had set here on June 27th. And so we might very well end up looking back at this as well, saying this was a low, this was a higher low, this was a high, this was a higher high. And you just never know when we go from being in a consistent downtrend to being in a consistent uptrend. Now, one thing that is a little bit of a challenge here is that we do have earnings coming up, like we do with so many companies. Remember, we're going to start announcing earnings here really within the next week. This one has its earnings coming up the first week of August. So I opted to do what's known as a swing trade in this case rather than a trend trade. And my hope with doing a swing trade is that I will be out of this trade either for better or for worse, right? For better if it goes up to my price target up here just under 35, or for worse if it comes down here to below this candle on July 5th and stops me out. But one of those two things hopefully will happen before their earnings announcement. If it doesn't, then I'm going to probably have to pull the plug on the trade early because I can't risk having a major gap against me on an earnings announcement there. The other thing I should mention is that with me going to be out of town for a week starting next Thursday, it's possible that I do close down some of the market outlook trade ideas, knowing that I won't be able to be staring at my platform. I'll be on a big road trip where I'll be actually driving for 4 of those days. And so knowing that I won't be in front of my Thinkorswim platform, sometimes it's better just to shut down the trades early so that way I don't have to worry about it. So if that does happen, I will be sure to telegram all of those trade adjustments out to anybody who's following us there as premium members at Market Scholars. Okay, so that's what I had for you here today, a simple bullish swing trading idea on Progeny based upon the breakout over the moving average here today, with the hope that it makes its way up towards 35. But if it does roll over and breaches below the low on July 5th, then I will be stopped out of this trade. Okay, so that's what I had for you here tonight. Again, if you want me to do my one and only video next week for a long format video like this one was with a trade application example, then I just simply ask you to take 5 seconds out of your day and click like for me there. It doesn't cost you a penny. On the other hand, if you prefer just a 15-minute quick hitter video and kind of get on with your day, then don't click like. And if we're under 100 likes, then I'll just plan on doing a short video. So I'll let you guys decide there collectively, and I'll look forward to seeing you all on Tuesday. Remember, David will be out of the office, so no Market Outlook videos before then either. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.